Think about this. One of the biggest transfers of wealth in modern times is about to happen. I'm talking about trillions of dollars, not millions or billions. These funds have been sitting in bonds, savings, retirement funds, and old world stocks for decades, managed by people older than you. Now that money is starting to move, it's not moving slowly or carefully. Younger investors, those in their 20s and 30s, are getting this shift faster. These are the people who are driving innovation, building the future, and feeding unstoppable trends like crypto, AI, and next generation tech. This is not advice about money. This is what's going on. Tom Lee has been showing people something that most people still don't see. Wealth managers and baby boomers who own most of the world's assets right now are already giving that money to younger groups. And past is clear. When young people get their own money, they don't keep buying the same old bonds and div plays. The future is what they want. They look for new ideas. They put their money where it will grow. That means crypto projects, AI companies, and tech that changes the world right now. Take a look. Every single age has seen the same thing happen. When baby boomers started working, retail stocks and the growth of suburbs took off. When the internet came along, it led to the biggest tech boom ever. The same amount of energy is about to be put into digital assets and AI right now. There is no denying the population wave. There is no doubt that we are in the beginning stages of a bull market. You need to know what that means. This is how Tom Lee broke it down. History tells you one thing: if you've had 2 years in a row of 20% gains, and then the third year is already up another 10% to 15%, the market is going up. Always. Such a bear market doesn't happen. Cat jumps that are dead don't last 36 months. There is no doubt about this. It is proof. Why do people hate this gathering so much? Easy. A lot of people were sold at the bottom. Economists told them there was a 60% chance of a recession, so they sold all of their assets and put their money in cash, but the drop never came. They can't get back in because the market went up too quickly. That's how people feel at a hate gathering. The crowd misses it and then tries to explain away their mistake by saying that it was stupid to buy things in stores. But let me tell you the truth. People who are thought to be dumb bought Tesla, Palantir, Netflix, and all the other retail-driven winners before the big banks woke up. Remember the first time Tesla tried to get big news outlets to cover the company? The first real report had to be written by a research company from Oregon that was hired by a hedge fund. That's how late the big money was. Now the same thing is taking place. Institutions aren't in charge, they are after. That's why small investors, younger investors, and people who are just starting to use crypto are so far ahead of the curve. Think about what the market has been through in the past 5 years. The bull market should have ended with any of these events. The most rapid rise in prices in history. The Fed raised rates faster than ever before. There was a worldwide outbreak that stopped business. The tariffs are a shock. All of those things should have either stopped the bull run or really shook up the economy. Still, here we are. Earnings kept going up. The market kept going strong. The kill shots never worked. It would be over if this were a real weak market. It's now cheaper, stronger, and more durable than it was before. Let me explain what this means. That stock wouldn't just be called a winner if it took 6 hits to the head in 5 years, but kept making more money every year. You might say it can't be stopped. And the PE number, less than it was before, it means the market is less expensive, not more expensive. This is where money is made. When most people are blinded by negativity, but things keep getting better on the basics. Let's add AI to the mix now. This isn't just a short-term tech news story. AI is what's changing the world right now, but faster, deeper, and around the world. There has been a driving force behind every business shift in history, people's lives in the 1980s, the internet in the 1990s, and cell phones in the 2000s. AI is not like that, though. AI works nonstop and doesn't need breaks or sick days. It also doesn't need bonuses or pay. It just gets the job done for a lot less money. Think about what that means for business. They can replace whole departments, cut costs by a huge amount, and increase output beyond what people could do for a few $100s a month. That's more than just economy. That's change. When companies use this technology, they will not only beat their rivals, they will wipe them out. The market is aware of this. That's why AI stocks are going through the roof, and why crypto projects that use AI are getting a lot of attention from investors who are putting a lot of money into the space. The best part is now here. The AI revolution is not going to happen. It's right here. This is made even worse by the fact that trillions of dollars are about to change hands to younger people. Investors younger than 50 understand AI. They live on computers. They own the crypto. Speed and chaos are more important to them than slow, safe ties. They don't need permission from Wall Street. A better world is already being made. What we see is also something that most people don't see. It has been 28 months in a row that the ISM factory index has been less than 50. Being that long is the longest stretch since 1950. People would usually freak out when they got a bad score. But what does it mean? It means that companies are careful, not happy. That's good news for investors since market cycles don't reach their peak when people are scared. There is a peak when everyone is sure of themselves. There is low trust, businesses are being cautious, and the Fed is becoming more dovish right now. That, along with the rise of AI, has given this market rocket fuel. Think about what will happen when interest rate spreads get back to normal. From what we know about past spreads, mortgage rates should be closer to 5.8% than they are now at 7%. That's putting unnecessary pressure on them. When that spread goes away, it becomes easier to get credit, spending goes up, and the cycle speeds up even more. It's all coming together at the same time. The shift of wealth, the rise of AI, and the start of a real bull market. So, here's the truth. It's not too late. You're early. Institutions are still not sure, analysts are still scared, and most investors still have their money in cash. The market doesn't give second chances, though, and the future doesn't wait for permission. It's getting stronger, there's energy here, and money is already moving around. The best part, things are only just beginning. Before you know it, the next few years could see more millionaires than any other. That's because crypto growth, AI deployment, and global capital flows are all about to come together. You see something amazing when you really start to plan out this change. We've been told to expect slow booms, long recessions, and steady recoveries. But those cycles won't look the same anymore. Why? Because AI and digital assets make time go faster. Things that used to take years to happen now only take months or even weeks. That's what's really making this mess. Let's look at efficiency as an example. In the past, gains in output were measured in single-digit percentages that lasted for decades. Think about how things are put together. It did change the way things were made, but it took years for it to reach every country in the world. Now think about how AI tools will be used all over the world in less than 18 months. These aren't small steps forward. This is a new kind of exponential growth in output that no one has ever seen before. That's why Tom Lee said this was like the Industrial Revolution. The pace is faster, but the kind of underlying change is the same. Right now, every business and every industry is under a lot of stress. They do well if they adopt. If they wait too long, they might become outdated. It's so cheap to join, just a few $100s a month, that people are using it so quickly that researchers can't even keep track of it. Take this and add market psychology to it. One thing that people don't fully understand about finance is how emotion affects the flow of money. We have numbers that show how cautious businesses are, how skeptical investors are still, and how economists are still talking about a recession even though the market is slowly going up. That care is like dry powder. Setting up is easy when fear is high. And when positioning is weak, any surprise to the upside leads to violent rises. This is why bull markets last longer and get stronger than anyone thinks they will. They climb up worried walls. The doubters stay out of the way, waiting for the expected crash, but prices keep going up. And each time they give up and finally give in, the protest gets stronger. That's what turns this cycle into something new. Not only are the basics at stake, but also the way that mass psychology and technology are changing at a speed that has never been seen before. Remember how the internet changed business in the 1990s? People laughed at first. They said email wasn't important. Why do you need a website? It's just a trend. Still, in just 10 years, businesses that went digital completely destroyed their rivals. While other stores laughed, Amazon was selling books online. That story has a happy ending. AI is moving even faster. It's not just something tech companies use. It's getting into everything from medicine and the law to transportation and entertainment. There are points in every business where AI can replace hours of work by humans with seconds of machine precision. The pressure is crazy. And once the markets understand how much margin growth this makes possible, prices will go up all around. Also, let's talk about crypto again. There is no way to separate digital goods from this trend. They are a part of it. In this market run by AI, value, contracts, and data will move along these rails. Blockchain is the road and AI is the engine. They work together. This is the reason why AI tokens and adoption trends in blockchain projects cross over. The foundations are being made right now, and younger investors get it in a way that older investors just don't. When Tom Lee talks about trillions of dollars changing hands, this isn't just money moving from one person to another. It's a change in attitude. Bonds, treasuries, and safety are what older people want. Younger groups want things that are fast, grow, and are digital first. And when that money moves through the markets, they don't just bend, they change. One more thing that isn't taken into account is resilience. Remember the last 5 years. Rate hike shock, pandemic shock, tariff shock, and global shock are some examples of shocks. All the books said that these events would stop growth, but they didn't. Still, earnings went up. The markets kept going anyway. What does that mean? That tells us the base is much stronger than most experts want to say. That brings us to value. Most of the time, markets would be expensive after a run like this. They're not, though. It's true that prices are cheaper now than they were 5 years ago, even with all the growth. Never seen that before. It means that the market is discounting you at a time when growth causes are increasing. That's like being able to buy Amazon in 2003 after the dot-com crash had shown that it could still stay in business. Let's get even farther away now. Long bull markets haven't been unstable in the past. They last a long time. Take a look at the boom that happened after W2. Look at the growth in the 1980s and 1990s. These weren't just one-year deals. They lasted for many years. We are now in the early stages of something with the same setup. There are demographic tailwinds, a technological revolution, and a reallocation of wealth around the world. The pieces are exactly the same. The only thing that's different is how fast it's moving. One of the most interesting things about Tom Lee's point of view is that he sees markets as more than just numbers. They're tales. Each cycle has a story that drives it. It was boomers who drove shopping and housing in the 1980s. It was the web in the 1990s. It was globalization and new markets in the 2000s. Today it's all about AI and money. That's the tale. Prices will show that once the markets agree with it. Remember, though, that stories don't wait for everyone to agree. The real gains are gone by the time everyone agrees. That's why these early times are so rough. People hate them. They think something is up because most people still don't agree with it. There's your chance. Once more, look at the ISM Manufacturing Index. When people see 28 months below 50, they think bad things will happen. However, markets don't reach their highest points when companies are being careful. That's when they're at their highest. A lot of people are still pessimistic right now. That means there is a huge chance for things to go well. Also think about the Fed. The Fed has been a headwind for the last 2 years by making conditions tighter. Of course, that cycle is changing. Cuts are coming, policy is becoming more dovish, and money is about to start flowing again. You don't just get a bull market when you mix easier credit with productivity driven by AI and capital flows driven by demographics. You get a super cycle. It's no longer about guessing. You can find the info, you can see the trends. Things are moving already. Still, most people are still shocked and waiting for permission or assurance that it's safe. Ignorance doesn't pay off in markets, though. They honor people who are honest. That's why this moment is so special. It's the meeting of three forces that can't be stopped. The biggest transfer of wealth in history, the fastest technology change ever seen, and the start of a bull market that is sure to last. All of those are strong on their own. When put together, they're huge. The main point is this. Do not forget how quickly all of this can add up. Trillions of dollars are going into the hands of younger people. AI changing how productive we are, crypto setting the stage, a Fed that is dovish, adding cash flow, feeling of doubt, keeping the pose light, and the odds are very good for growth. It's happening now, not in 5 years. The real question is what will happen when most people finally get it? What happens when the investors who said the rise was stupid can't afford to stay out any longer? That's when markets go through the roof. That's when stories go from being unbelievable to being amazing. And if you look at the past, that's when people who got in early make a lot of money. These events are not just another trend. It changes everything about how markets work. Just think about the old one. The markets moved at the speed at which people made choices. Research papers, quarterly earnings, and choices made in the boardroom. But now, AI is making that clock go faster. The data is handled right away. Chances are seen more quickly, and the killing takes place right now. There are changes in the speed at which cash is being allocated, and there was no shift like that before. This is the reason why some stocks and tokens are reacting so quickly. Capital has made moves faster that used to take months. Now they only take weeks. The investors who understand this shortening of time will make the most money because they won't have to wait for consensus approval. When the crowd shows up, they're already ahead. Also, let's not forget about the change in how younger buyers think. Changes in price don't bother them. There's a chance. Older people are afraid of 10% changes. For younger groups, they're a way in. That shift in thought is strong. It means that trillions won't be distributed with the same care as before when they move. They will be put to work quickly on assets for growth, change, and digital first. Just having that attitude makes the wealth shift work even better. And history shows us that demographics not only shape markets, they make them what they are. Everything from housing to retail to schooling went through huge growth when baby boomers were in charge of the economy. Whole industries changed based on how they bought things. It's going to happen again. But this time, the drivers are digital natives who put speed, efficiency, and the ability to grow above all else. That's why AI and crypto are a great fit for them. Don't just think about spending in things. It's about agreeing with a view of the world. Global competition is another issue that is often overlooked. Each government is aware that this change is taking place. The US, Europe, and Asia are all rushing to use AI, blockchain, and digital money. But markets reward the first person to grow. That's the reason why money is moving so quickly. We all don't want to be left behind in what could be the biggest growth engine of our time. When we look farther away, we can see that cycles of change have always honored bravery. People who believed in machines during the Industrial Revolution made a lot of money. Skeptics stayed out of the internet boom, which made tech giants. Now, AI and crypto are making it possible for the same thing to happen again. The pattern stays the same, even if the names change. The benefits get bigger and bigger for those who move first and see clearly while others hesitate. Now, here's the deal. There are turning points in every market. There are times when everything comes together. Policy, technology, population, and how people feel. Right now, we're going through one. There is no doubt about the merging. And buyers have an easy choice. Either see it and move properly, or don't care about it and watch history happen from the sidelines. That's why now is not the time to think small. Now is the time to be clear and take strong action. Because the easy gains will be gone as soon as this story changes and the market as a whole wakes up. People who are late to the game will be scrambling to buy the assets that early adopters already have. This will cause prices to skyrocket to levels that most people today can't even imagine. If you've been paying attention, you can see how things are set up. You can see why this is important. In times like these, timing is very important, so don't miss it. Another thing, don't forget my Robinhood offer. With a $1 deposit, you can get free NVDA stock worth up to $200. It's a quick benefit, and it would be crazy to miss it since chances like this don't come up very often. Things are about to get really big. The markets are confirming the bull run, trillions are changing hands, and technology is changing the way people work.